Welcome, welcome, my friends, to the show that never ends. It's the Breakfast Club. My name is Darren Hancock. I'm your host today. It's October 30th, one day before the little Halloween's happening. All the little kids and creatures come around the house and looking for some candy. Very interesting tradition, let me tell you. All right, let's get to it. Oh, and thank you so much. I have 32 subscribers. 32 subscribers. Thank you all for turning out at one time or another to watch the videos. If you like them, hit the smash the like button. I appreciate it. Not that I'm trying to build a huge following here. It's nice to have some people that kind of to see what we're doing and they like it. We are here on a Monday now. We've been doing this for a couple of months, and it's been fun. I've been really enjoying it. So thank you again for all those people who are tuning in to see the Breakfast Club in the mornings. Those of you come in live as well. You are welcome, welcome, welcome. And let me make sure I've got everything all lined up here. I'm usually the first one in here in the morning. Of course I'm the first one in here. Jeepers. I'm the first one here because I'm the first one doing it. Jeep. You can tell I just woke up. All right. 30th of October. Here we go. Let me get the old Breakfast Club fired up here on Skype. All right. Hopefully we've got some people can tune in today. My buddy Kevin, hope he's had a good weekend, and Derek, and Lauriston. Hope it's we've had one guy didn't turn up. It's a young guy from England. Zorro hasn't turned up in a while. Hope he's okay. Anyway, let's get to this. This is the British Pound USD live today, October 30th. And it's sideways. There's really, all we've got, if I zoom in here, all we've got is this little tiny piece of price action right here. You see that? That little imbalance right there. That's all we really got. So we're sitting flat right now. So we're between rejection block. We've already come down to this order block here. The body. We've keyed off of that body here. So all you really got left is the threshold. This low rejection block and this order block above, which is the low, the open, and the threshold. Those are the PD arrays we're looking for right now in terms of where we're expecting price to go. Otherwise, on the daily, we're flat. We're also on a Monday, right? So we're not quite, I have no direction for this yet. Although Europe, in the euro dollar has a nice big gap that's formed on the daily. From the low to the high, we've got another new week opening gap in between all the other new week opening gaps that are overlapping here now. So when they're sitting that close together, usually you'll see them consolidating, and you can see how they've just been building up here. As I add more, they're just overlapping and overlapping. So if I stuck another one from here to here with a midpoint here, I think this is the one I made. The midpoint is right here. So they're overlapping. I like the fact that we've hit the top of this daily. Right in between here and here is a daily fair value gap. Run that all the way through. We've hit the top of it perfectly here. Now I've reacted off of it, so we're back into this little range again here now. So we have this order block here. We have a little fair value gap from here to here. So I'm going to start cleaning out some of, it's starting to get super messy now when you start to get so many overlapping PD arrays. It's kind of hard to get a good bearing on where it's going to go. I got somebody watching. Good morning. Welcome, welcome, whoever you are. Mystery person, you're welcome. Who said it's morning? How's it going, buddy? Guess the mic isn't working. Oh, no. Can you hear me on my end? It doesn't even say that... Let me see if I can share this with you. Can you hear that? Yeah, I hear you fine. Okay. Because I'm in the Breakfast Club, it shows it's working. Yeah, I hear you fine. Well, that sucks. I can't hear you at all. Let me just double check my settings. That's my microphone. Skype. Audio and video settings. Microphone, speakers, test audio. Wait a second. Test audio, and I don't hear anything coming up on there. Default communication device. Standby. Standby. Okay.
Are you there?
There.
Hey!
All this time, my friend, and it was me. I was like, go to your audio settings, and then there was this default. It's like, yeah, the defaults. Like, wait a second, and I've got so many different settings for different speakers and stuff. So
Because when you went up north last week,
yes, that's probably
from the other laptop, maybe the Skype
yes.
saved the settings from that computer, and then when you came back to this one, it was different.
You're probably right. That's what we're gonna go with.
How you been?
Good, man. How are you?
Good. All right, what are we looking at here? You got the euro up.
The euro, yeah. So we've got the upside fair value gap here on the euro daily, and we also have that threshold of that last up close candle there. So really, we're inside this range right here. We're kind of inside this order block and that threshold. We've bumped into the fair value gap on the daily again as inversion, and it's kind of not just hit the edge of it perfectly, and it's reacted off it. So my guess is they want to drive through this and start getting into the higher PD array, because right now there's a whole mess of new week opening gaps that are just sitting down in here that we could potentially be bouncing around off of. This new week opening gap is close to the top. This threshold is close to the or that would be the consequent encroachment is close to the opening on that. That one's close to the low. Like here's your midpoint, there's your 25% point. So everything kind of lines up with beating this guy up here. So I got no move on that on the daily just yet. I'm going to rifle through all these, and then we'll go back and start chopping them up. So this one here, I see this inversion fair value gap there on the the BISI. We hit the edge of it, finally drove through it, came back all the way to the low of it again, and a little bit through. Body respects above it. We're coming back into the top of it. My guess is we're just going to find some support right here. I also have this order block, large order block, as a potential place for it to come back to revisit this fair value gap here on the US CAD. The Japanese yen still not pushing for that high yet. We're still stuck near the midpoint. The bodies are just popped over it a couple of weeks ago, but we're just sitting right on the threshold of this. Actually, that's not even the threshold there. This is more like the threshold. So we've actually, the bodies are respecting the threshold of this. Or the consequent encroachment of this wick. Australian dollar finally pushing up through this fair value gap inversion. That's probably on the hourly. We'll break that down a little bit later, but looking for the high of this daily fair value gap once again. If we get on top of that, then we're going to slowly start to break out of this low. We finally ran out all those equal lows we were calling for last week. They're run out. Now we're looking for a run above these highs and get back into this order block up here. We still have the opening of this order block here. I think that's actually a breaker. It would be the parent breaker of this huge range here. So you have the opening of that, and we got the threshold of that yet to go. We also have this fair value gap on this side all the way up to the opening. So yeah, we're still sitting inside this one and this one. On Australian New Zealand dollar, we finally got a dip down. I was expecting New Zealand dollar to make still got a run down here. I'm still bearish on New Zealand dollar because we haven't broken these highs yet. If we break those highs with a big bull candle for the short term, we're maybe working on the other 50 to 75% of that range, and the 25% that's left won't get worked for a little while yet. Don't forget, I like the December turn for these New Zealand and Australian dollars. I like them to turn around December, first week or two in December, and then we get the big run up for the rest of the year into February. Where else are we going? Oil sitting kind of flat right now. Ran out those equal highs on Friday. We came down, created a ton of liquidity down here. We haven't taken out the lows since Thursday. And Thursday, we haven't even taken out the lows since Thursday. Thursday didn't even create a new low. It hasn't taken out the Wednesday low. So if we continue in this little up run, we should start to push for this equal high at top of the weekly fair value gap here. We're going to come back up, revisit that. So if we don't start working the downside of this, see how we've worked 50% and higher, 50% of that range. Now we're looking to start working this lower half this week. Natural gas has done everything we've asked it to do so far. It came back up again. I was calling for it to just stop right there. That's where I wanted it, but we would allow it to come back to the top of the fair value gap on the weekly, which it did, and reacted beautifully last week off of that. Cleared the old high, and we had body close just above the weekly high, as you can see there, just touched above it. Now we've gapped down, but we're still inside that weekly fair value gap. So I'd like to see that not lose the threshold of this order block here. You can get a wick come down, do a little bit of damage, but I'd like to see that run. Monday or Tuesday would be the low of the week, and according to my rule, today should be the low. Today should be the low, so we should have a wick low, and then we'll start pushing back for higher prices. So that's what I'm kind of looking for here. Down and run back up. There's the price imbalance on the daily natural gas. So we're looking for a return into here. Whole price, there's lots of little price imbalances. Fair value gap, price imbalance. End of this fair value gap still isn't filled yet. Price imbalance. There's so many different places this could come back to. We could be going sideways here for a while. If we're looking for a logical place to step off of, this would be it here. If I take that, we split those two, 19, so 20, so 10. 10 would put us right inside that little price imbalance before it returned back up. The S&P 500. S&P 500, look for this to return back into this fair value gap daily. Now an inversion. We have a little imbalance right here. We also have the edge of the daily fair value gap. So if we come back up, hit the edge of this again, or dip into this, look for this run into here with a low. We also have the weekly, monthly fair value gaps that are now inversion fair value gaps. So look for first place to give some support would be the bottom of this fair value gap here, this price imbalance. And I'd like to see this just hold price right here. Again, maybe just pop above it and then start running back down below all this cheddar down here. There's a lot of liquidity down here. We've got this fair value gap cheddar here, and then we got a pocket of fair value down there. So lots of busies on this side. So we could still see some more longer term run down on US 500. Tech, NASDAQ, so we're just hitting the edge. This is doing the same thing we're just mentioning in here, that little price imbalance. See how NASDAQ's already reaching for its price imbalance right here. We've already blown through the daily. Oh, we haven't finished the daily off here, but we're starting to go back into that weekly, and we're hitting that price imbalance now. If we hit the edge of that, I like these equal lows across here as a potential wick run through this. So keep your eyes on this area here and the bottom of these lows and just the top of that. So this is an area of sensitivity I'm looking for in here.
It's up like 125 points in just 7-8 minutes.
Yeah, you can see it's definitely making a little run there. Lauriston, good morning, my friend. How are you? Yeah, so keep your eyes in that little area. There's a little pocket in there. So what we look for on the hourly, I think this one might be the one that we could run for today. You're looking on the hourly for something that provides some support at these levels, and like an inversion fair value gap that we can get to get short and start heading back down into this lower range here, if we're not starting to run back up into the 50% of this range here. If we start taking from here to here, 50% puts us right at those lows I was just mentioning, right on the money. That's good. So I like that idea of returning into here. Now I've got more of a bias just because of this. I got more of a bias above here into that area right there. You had a good weekend? Hope you had a good weekend, Lauriston. Everybody's safe, family safe. I'm going to leave that there. And gold. Gold did a nice little dip down, I noticed today. Or since the opening. We opened, shot down to, you'll see it better on the hourly. Breaker. We got above it, came back down all the way into it, right into the threshold of it, and then peeled away. Breaker. Came into the top of it, body of it. So that whole breaker there, this one here, overlapping, hit it nicely. Now we've run back up, and now all we've got left is that little price imbalance up here, order blocks, breaker. Wow, sorry, not, no, it's not a breaker, mitigation. So you want to see it blast through the top of this daily. And my friend who wants to buy Japanese car, there you go. Return to the bottom of that fair value gap. It's an inversion now. We could start to see this degrade in price, especially if the Japanese yen holds price at that midpoint, consequent encroachment of that wick that we talked about over here, right? So if they hold, then, and the Canadian dollar continues to lose strength against the American dollar, so that means it's losing strength. Once the American dollar gets stronger, the CAD's getting weaker. That would explain why. We're going to tip off here and then run back down. All right, so let's go back into this one here and look for our hourly entry now. So this is since the opening. We're into that price imbalance there on the hourly. Alright, let's look for 15 minutes. Okay, so this is our it's taking a quick little run up there, hey? Quarter two, we might be just running these highs for 10 o'clock. This would be an important little run up here now to see where this goes for 10. That's running for the equal highs up there. We're into the threshold of this breaker here now. Is this hold price? Do we run for the equal highs? And then we got the threshold of this breaker here. So we'll see what happens here. I like this fair value gap, highs, threshold. We could get fair value gap, which is a rejection block. bump off that, turn around and come back down again, creating equal highs yet again for more liquidity on the upside. And we're up into that fair value gap. Weekly inversion now, and now we're looking for the price imbalance. We're feeling that on the hourly now. Taking out the high. Here is 69.75. We are at 71.50, so we broke the high. This candle's close 76.45. We're in the midpoint of this weekly fair value gap now. Looking for an short after the daily liquidity is taken. You're looking to get short here. I had a little run on Friday, Lauriston. Man, we ever managed to get through that mess. Do you see how that ended up, though? It ended up just dropping right now like a stone. So even if you left that one for the rest of the day, it would have totally panned out for you as well. So it was nice that we kind of navigated through a lot of PD arrays to get you out of that. But in the end, it just dropped like a rock in the end and cleaned everything out. So you would have done quite well. But at least you didn't take any hits on that one. It was fun playing that one on Friday.
Where is this NASDAQ going? We're into Wednesday's chop. We're in all that mess over there on Wednesday. Is it going to just turn back around here? I mean,
well, we're starting to get into this chunk of up and down stuff going on here, right? But we still have the top of this weekly fair value gap inversion. So if its intentions are usually because you think we're just going to tap it when you got the midpoint, okay, we'll just take out the highs here. All right, if we finish off at that inversion right here, that fair value gap fill there on the hourly, we're blowing through that. So if we hit the top of this and start blowing through it, now you start looking for support. Maybe we've got to turn a short-term turn here for a run up. So don't forget, this could be, is this the weekly wick we're working on here? Is this the weekly wick that we're going to turn around and start slamming back down again? Because on the daily we still have lots of potential, but we also have, so that weeklies, we're running at the threshold of the weekly fair value gap on the downside, but we have the upside 50% of that range. 62% puts us right on the bottom of the monthly fair value gap, which we haven't hit on the way up. So keep in mind you have 50% and 62% retracement of that little range we have here, and 62 puts us right on the using the monthly as an inversion fair value gap to continue on the downside. So Keep that in mind, because if this ends up pushing up, all the other ones will start to rise with it. So that's kind of like what I'm looking at there on the daily. So it's kind of hard to call it right now because she's on a tear, and most people want to jump in on a tear like that, but you gotta wait. You gotta wait for something to set up.
That's what I was trying to picture where its target's going, so I could.
Yeah, that's the only two targets I can see in the short term is the 50% here and return to that inversion fair value gap on the monthly for either a continuation on the downside.
That's what I'm thinking.
Yeah,
it's like you said, it's gonna tap it and then turn right back around.
Yeah,
for further correction.
So now if we watch this by 10 o'clock, we've got to think, okay, what PD arrays could be taken out around 10, and then you got the first 10 to 12 minutes after that. What kind of arrays have we got that could potentially get a reversal on? Well, you have the top of the inversion fair value gap weekly. We have the 50%, which is taking out these old highs here. We have a small little fair value gap up here on the hourly. And we also have that 62% retracement, which is the bottom of the monthly fair value gap. So the next 20 minutes or so might give us some. And if we do get a big bold up candle like that, you think about all the liquidity that needs to fill on the downside then.
Laurel still wants to know if you look at the US 30.
US 30. Dow. Oh, no, I don't have Dow on here. I can look at that. Oh, I'm going to add it to my little pile here. Symbols. Indices. Dow Jones 30. All right. Dow Jones 30. Let's look at the daily. Dow Jones, you got this up here. Dow Jones 30, look for the old lows here, which is the bottom of that breaker. Last down close candle before run above these equal highs here. So look for a return to the breaker here. Upside, we could just get this fill right here, a rebalance of this price. If you continue to push up, if all the other ones continue to run as high as they're going, then we could look for that as the inversion. Let me see what the weekly looks like for old low. Inversion fair value gap on the weekly. We've already created one over here. If I go over there like that, and then go here, slight gray. So that's the weekly. You could be coming up to tag this right here, roll over and start coming back down. Look for that fair value gap that we mentioned on the daily here. And let me look at your monthly. Monthly, you've got nothing in here. We've come down to this order block. We've come up above it. That makes this the breaker. We've come down into it, reacted off of it, come back down into it again. It feels like it's got more downside. We got into the mean threshold of this up close candle being the breaker. Up close candle run before these lows. Inversion fair value gap on the monthly. That's the only one I can see right there. And strangely enough, if we reach the top of this monthly one here, watch how these overlap. If I pull this here to here, and we put this as pink. Sorry, I have to hunt for the word pink or salmon or something because I can't see the colors. Light pink. That looks way too gray to me. Let me get a lighter. There's a salmon color. So when you start getting into this again. Watch how they overlap. See how when I start drilling down into the dailies now, they're daily, weekly, monthly. They're all overlapping in this area, so I like this area for Dow Jones. All right, let's get back to this tech one. So we're looking at the high there. We still got 5 more minutes. Yeah, I really enjoyed that Friday. Lauriston and I had a really nice breaker trade off of a breaker, and it was a sloppy breaker. Like, holy man, sloppy. He traded off that thing on, what was it? It was the 500, wasn't it? On Friday? I just want to see where it was, just so I can kind of show people before 10 o'clock. Yeah, I think it was this guy here. He keyed off of this breaker here. He came back, took a piece of it, and we got caught in this big sloppy mess in here. And it was like, it kept running back up and then back down and come back up. So in the end, I think we chopped it up to
a break even.
Oh, yeah, I think he ended up making some money. We ended up getting him down to, I think
nice.
He broke this low here, and then all of a sudden it just continued to degrade down for the rest of the day. But we just said, okay, man, you got to find a way to get out of here. It was just getting so painful to watch this back and forth. And he would nibble a piece off, and then we're like, okay, as soon as you break this fair value gap here, you can nibble a piece off. So he took a piece off, it went back up again, then came back down. It's like, okay, you're going to get it. Oh, no, it came back up again. It's like, okay, you're killing me here. But he ended up getting his money out, so good for him.
I had a crappy weekend. Wednesday night, I get ready to go to work. I had a flat tire.
Oh,
so
no.
I take the other
That's
car.
right. How did the dentist go? No, doctor.
Doctor. I thought I had skin cancer on my leg and a piece on my shoulder. So I never go to the doctor. So I went and finally got checked out. And as soon as she's like, all right, let me see. I lift up my pants right above my ankle, and she's like, okay, that's benign. Let me see your shoulder. She's like, oh, yep, that's benign. I was like, oh, perfect. She's like, what do you want to do? I was like, I don't know, what's my options? And she's like, well, you can cut it off, or if it's not irritating you or getting in the way of a seatbelt or anything like that, you could keep it. I said, oh, okay. She's like, well, what do you want to do? I was like, oh, I don't know. I guess get rid of it. She's like, well, you're giving me the wrong answers. So are they irritating you and getting in the way of a seatbelt? I was like, yeah. She's like, okay, then we could deal with it today. Because if not, you have to deal. If not, it's cosmetic and you got to pay out of pocket. I was like, yeah, no, I'm not doing that.
Yeah, it's irritating me.
Yep. So like,
suddenly it's become very irritating.
And then the tire ended up being like a little tiny thin nail. So it was
really?
$34 to fix that. So
wow.
Better than buying a new tire, because I just got new tires in March. So I was like, damn, I got a new tire already. So.
Wow.
And then I walked home. It was only like a mile and a half, but I got all blisters on the back of my ankles.
So you can drive back to the doctor again. So
So Saturday we were supposed to go hiking because it was supposed to be beautiful weather, and my ankles were all messed up. So I was like, I'm not hiking with this blisters, and I was like, no. So she was a little disappointed, but she understood.
Yeah.
What do we got?
So we did get the bounce off the daily. Just to run that equal high out. This is what I think Lauriston was saying. He's going to take a short right off the top of the daily. So if he just popped above that, if you grab that Lauriston and you took the short there, then so far you're looking good. If you're just cleaning out the high there. It's right before 10 o'clock too. So now you look for your fair value gap on the 5 minute, 0 on your 1 minute, and you can get short. But I'm going to wait a few minutes first.
10 seconds before the candle closes.
Would you guys recommend a prop evaluation or wait till next year? A prop evaluation, what does that mean?
The prop firm, like I did.
Oh,
I
prop
got
firm.
funded.
Yeah, yeah. You know, if you're just starting out and you want to risk very little, I'm in Fivers, and there's like $39 American for a $5,000 account. You can trade that, and then just slowly start working it up. Or you can go big, go with a $100,000 account. I think they're 300 and some odd dollars. Same kind of rules, but they have like a boot camp. They have a high risk or high stakes one. They have multiple different ways you can enter into it. But if you've got a solid setup that works for it, doesn't matter what you're getting in on, you'll work it up. And I think you use Bespoke, didn't you?
Yeah, I used Bespoke. I did it, and I liked it. I enjoyed it. I learned a lot. It sucks that I screwed up and had the wrong lot amount on gold, so I'm not trading gold. But yeah, I enjoyed it, Laurelston. I recommend it. It teaches you a lot of money management. I could have probably finished my evaluation a lot sooner, but I just I took the silver bullets, the London and the U.S. session each day, nibbled off just a little bit, and got funded.
And you were like so close. You were like the beauty queen pageant, holding the roses in your arm, and someone pushed you off the stage, man.
Yep.
You were there.
Is this our run up for Euro? Is this where we're taking off here?
This is the 5 S&P. Or is this Euros on a run up?
Euro and pound are running right now.
So we're looking for that rejection block there. So if you're looking for hourly, let me make this a little smaller.
It just tapped in past the hourly.
There you go. That's for the daily fair value gap. We're just popping through it. So if you get some support on that, you only got my immediate run is to this inversion fair value gap here now. We're kind of overlapping. So if we find some support at this and push through, look for this higher time frame daily, and you got the weekly, new week opening gaps. You got lots of PDRAs to aim for in terms of scaling out real quick if you want to nibble some money off of that. Lauriston, if you did take your run above the old high there, good for you. That's just enough to get you in, and your potential scale outs are already one here. The next one, old lows, breaker, inversion fair value gap, or run back down for these old lows here.
See now.
No, we just got a little wick above that. We could start getting a hourly coming out of here. Leave this open as a break in market structure now to the upside, and then the next hour we tap back down on top of it, and then start running back up into this daily fair value gap, starting to clean out these old highs and finish off this gap from Wednesday's gap, or Thursday's gap, I guess it was. So look for some support here. Haven't entered as yet, waiting for a high probability gap to form. Yeah, I'd like to see that kind of hold off right there now, and leave this open. This will be a nice little breakaway gap to start pushing into higher prices here. Now let's think about the reversal of that. The reversal of that would be, we're into this breaker. We're through the threshold of this already. We've already popped the top. You could be running right back into this new week opening gap I'm going to take this guy here. That's about the midpoint of that. All right. What's this tech now? Okay, so now it's come back into the top or the bottom of this gap. Bottom of the new week opening gap. And the bottom of this weekly fair value gap. We're at 6 minutes after the hour now. Didn't quite tap this guy here. So close. There's a little of that little break in structure here. Fair value gap. Tap it.
Euro is looking, just had to change in structure.
Okay, so we just broke above that. Bodies are respecting the bottom of the daily fair value gap. So have we got more upside? So we're coming back. We popped above here. Look for this breaker here to provide support now. See how the bodies are respecting that right now? Stopped on it, opened it. So if it taps that, look for a reversal from there. A potential reversal right here off of this breaker. So look anywhere inside here. You want to see that hold price. So no more than halfway on this wick. 25% would be nice. Reverse off that. And what do we got here on the 15-minute?
Just shy of the 618.
Another 3 more minutes. We have a fill right here on the 1 minute. We have another little piece here.
It has to clear this candle, which is...
Yeah, I want to see it get back into this.
Over 106, 116, it looks like.
Has to clear that, yeah.
It clears that, I'm going in.
Yeah, I got in already on this one to go along. off of this breaker here.
You're long on euro?
Yeah. I just got to stop while sitting down here. I'm just using the breaker for the 1 hour breaker as a this guy right here. I'm using the bottom of it if I'm wrong, and it comes all the way back to, we've already come back and tagged this high here and pulled away. So for me, this order block's got to be your breaker's got to provide support. If it doesn't, then I got a small thing on there for a run up. And yet I have no other belief other than that. It's not the fair value gap setup. Let's look over here at tech.
US 30s just going sideways. Dow. Pounds lawfuling around.
Oh, so we're still sitting in here. You're short on NASDAQ, you said?
I'm not, no.
No, Lauriston looks like he's short on NASDAQ. I'm trying to see where he would get in here. So inversion, if he's using this as an inversion fair value gap, we've gone through it, come back up to it, find some support at it. Anywhere inside there is fine for a short. Back to equal lows, or equal highs, I should say. And then this pocket down here, scale out portion here, 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 run down to the low. NASDAQ has a better PA rate to short on the 5-minute inversion gap and bearish fair value gap. Yeah, that's what he was just looking for there. Okay. You entered in on the gap. Good for you. Now, do you have a specific scale out routine that you use, Lauriston, when you run for your PD arrays? Like, do you scale out at 50%? Do you use the fib tool to scale out, or do you look for fair value gaps to scale out at, old highs? Like, what's your PD array search? Are you more of a long-term scalper, or are you kind of like, do you scalp over the hour? I think my stop loss got taken on the euro. Oh yeah. I was just below that low there. It just took me out.
It took you out, and now it's turning around?
Yeah.
It's gonna do you dirty like that?
Yeah, that's okay. There's the hourly breaker. I didn't want it to go below that, and I was just below it. It was only like 0.1. It's only like 10, like $1 a pip or something like that. So it's like $8.
There goes your Starbucks.
There goes my Starbucks. That's right. It's a good thing I made coffee at home today.
Yeah.
So that's returned all the way back to that new day opening gap that was created on Friday. So now, Lauriston, have you got your a specific type of scale out that you're using to clean out of your trades? Oh, 57, 58 is 26. Potentially here. I close off 50% of my trade and move my stop to break even when it reaches 50% of my position. I take 90% off when it reaches 90% of my position. 90% of your position. So, yeah, I don't get what you mean by your position. 50% of your position, I take 90% when it reaches 90% of my position. Like 90% of that range? Is that 50% of what I was just pointing at there? Yep. That could be the bottom inside that consolidation. That was a good run there. Good call, Lauriston. Nice play. Oh, well done, well done. So that's the kind of reversal we're looking for in here. Didn't quite get the top of that. The bodies of the candles respect that imbalance, that gap that was here. And now we're looking to run back into this gap. So we're between here and here now. I mean, like the distance between my entry and my take profit. So your take profit is at, when you look at your entry and then your take profit, do you usually stick it right at the bottom of a low or an hourly low, or do you have like a direction that you look for a daily? Like what's your terminus? Is it just over the last previous hour? About to clean out these lows here. Yeah, look for this, a run down into this. We're just bouncing off the new week opening gap here. So look for the center, midpoint, and the low of that new week opening gap. So if you're still in this, Lauriston, good for you, buddy. Good for you. It's a nice little run down into some good liquidity there. There's a ton of it sitting below here. And building it up all day since Sunday open. It is the hourly range. Okay, good. Currently the low of the hourly range, so that's good. And then you got that inversion, or you got this gap in price right here that we had for the gap up this weekend. But I like the little scale off a piece right below that low. Well done. Price tapped into the daily fair value gap, potentially forming the high of the day. So I'm expecting it to melt right down. Oh, we got a new guy. It really hurts. Welcome. Do you take the fair value gap if it breaks the low of the hourly? Looking for a short. Do you take the fair value gap if it breaks the low on the hourly. Looking for a short. Usually you want to see something support a price. You don't want to see it just wick down into this and then pull back into the range again. So you always have to think when you're in a range, especially the hourly ranges, if we get a reversal, you're right on the very discount portion and you're about to get your butt handed to you. There's many times I've been on these, just pops above something and you go long on it and it actually turns around on you and comes back down. So if you get a decent fair value gap down here and you come back up to this breaker, like if this breaks down in here like that, creates a fair value gap, comes back up and tags the fair value gap, or hits this breaker here, then you can go short. But just as soon as it taps below that, you don't want to risk taking your trade. At least that's my idea of it. I don't know how do you other guys think about that? Do you want to be known as It Really Hurts? Or do you have a name? And if you want to be anonymous, I totally respect that. So right now we're kind of just bouncing around right off this equal low here. The bottom of this candle is 57.75. The bottom of this candle is 58.25. So this one's just slightly higher than this one. So you want to see it drive right through with some force. Either come back to the fair value, this breaker here, or create a fair value gap that you can key off of and continue driving down for lower prices in the day. How's our gold looking? We're back into the daily. Let's have a look at this one. Now we want this to act as an inversion now. We went through it. We wanted it to hold price if you're going to look for the upside. We're eating all the way through to the bottom of it. If it pops through, comes back, finds support, look for this gap down below here. That was just a quick little run on stops above the market. Joey, holy smokes, we got people pouring in today. DXY bearishness during the 950 macro stopped me from taking my short. I don't like trading non-symmetrical markets, but now I'm beating myself for it. 950 macro with SMT was beautiful. Welcome, Joey. Welcome, welcome. Yeah, Lauriston got a really nice trade right off the top of that. Did like a little tiny turtle soup there. Let's get down to the 5 minute here. There's this little fair value gap. Now it's now become an inversion. We've opened right on it. here, drawing down for deeper prices. Just the hourly here. There's a little tiny piece in here. We have a BISI right here on the hourly. We've now run that low. We're back into this inversion fair value gap right here. Are we allowed to share screenshots? I don't know if you can share a screenshot on the live account here. No, I don't think you're welcome to if you know how. I don't have a I don't know how you could share a screenshot on my live account. It hurts, sorry. But if you know a way, then yeah. Can't on YouTube? No, I didn't think you could. In your experience, is this the reaction we usually get on NASDAQ? Is the only one to run the highs of the last 2 trading days? Well, yes, don't even run PDAs, H's. Reaction usually get. To be honest with you, for typical reactions, I just look for. I'm just a PD array kind of guy. I just look for specific PD arrays, like order blocks, runs on highs, how things act according to, what does it typically do during a certain hour or a certain time. I couldn't tell you. I just go, is there a news event? And do we have anything that would support the PD array I'm looking at right now? So in this case, we're looking at that midpoint of this order block here on the 1 minute. I'm just looking for that low, open, and threshold. Do they hold price? If they hold price, we have further downside. That's just a simple order block theory. And then you start going into, now that we've broke below this low here, does this breaker now provide some support? So you look at the low of the breaker right here. We come back up to it. We tag the edge of it. A body, you can allow a body to come in here, which would run above these little tiny highs right here, get back into that order block. So I'd be looking for these two as a threshold. I'd be adding, first starting off with this one, then I'd add 2 of them together for the midpoint. You wouldn't want to see it break the midpoint of that, otherwise there's potential for further upside. It's a 1 minute candle, so you could say that would be a 2 minute breaker from there to there. So anywhere inside that range, you could get a waffling around. But yeah, I don't usually say, well, this is the feel I get for this particular market. I know Michael's really good at looking for that. I just look specifically from PD array to PD array, how it plays, and what's the news on the day in terms of how we're going to get some reaction off of these order blocks and breakers. Bodies are respecting the breaker low. So now I'm looking at, because we broke above this one here, you've got the open threshold. Now we're digging into the body, threshold, order block, Now, what I can tell you usually is I'm more of a time kind of guy, so this could be a false run in the first 3 minutes, or first 5 to 6 minutes after the bottom of the hour. You get these false little pumps up, and then all of a sudden a continuation on the downside. I studied time really well, and there's some things, if you stick around here, you'll start to see more of these calls on specific times that I like to make. Would you like the 1 hour to close below the current low? Well, there you go. It closed below there. Yeah, I'd like to see it close below this gap. That new week opening or new day opening gap that happened on Friday. If we can get below that, then you've got more potential downside. Then you can get in on a 1 minute entry there off this order block if it pops back into it and just tags the bottom, or even this one here, because we have a swing point, down candle, run above old highs, and we get off of the top of this one, which is actually the bottom of this gap you see here. So if we can close below here, come back up and just tag the bottom of this provides us some support. Then you can start running down and catch a decent run down. Does that make sense to you, Lauriston? So you look for do you ever measure last legs of manipulation? Measure the last leg of manipulation, ES, and look where the -4 standard deviation is. ES, measure the leg of manipulation. What time frame are you on, Joey? 9:53. It's probably the 1 minute. .53 to 9:56. This one here, and you're looking for your oops. That's 2. You have 4. You got -4. don't know why that's not going in there. No, usually what I do when I'm measuring price legs is I'll do a price leg like this. I'll pull the price leg from here to here. Let me get this. Oops. And then I'll pull the price leg from there to there. So that's how I'll extend it down. Once I break this this inversion fair value gap here, you come back into it. That would be my price leg down. How I would, so whatever standard deviation, I don't use that that pull from there and look for a standard deviation target to reach for. I'll usually pull a fib tool all the way from top to bottom here, if that's the main range that I'm looking for. And that's my price leg. My price leg down would be 75% of the range. So whatever that ends up being in your standard deviation, Joey. That leg didn't take 41.91 and zoom out a little, I think. -4. Out to your picture. Oh yeah, if I go out a little bit. Sorry, let me put my other thing back in there again. Yeah, there you go. There's 4. There's your 4 deviations down here. Yeah, that's I'm inter-range liquidity kind of guy, so that's how I would be running for my internal range liquidity, and I'd be looking at 50%, 62%. I'd be pulling it off of there. If you're a longer range guy, then yeah, that 2, 4 handle, 8 handle, just running out the lows. Again, what's your daily bias, right? I'm always measuring the last leg of manipulation, and it's interesting to see us usually reject that to that exact tick, -4, like today. That's definitely something to keep an eye on. Thanks, Joey. Yeah.
Every time you run that the lines instead of the fib, I'm more impressed by the lines that you add as opposed to the fib tracement. It's just more mind-blowing to me, like how it perfectly lines up.
What, when I drop lines across here, you mean?
No, your ray lines that you drop in.
Oh, like when I pull one out?
Yeah.
Yeah.
Is more it's just more mind-blowing because it's like it lines up like perfectly. The fib retracement, okay, yeah, fine, whatever.
Yep.
But the lines that you add, it's just okay from this level and it right to a certain point.
Yeah. Like when you pull these price legs down.
When you add your lines in, you add your ray lines in, it just goes right to a spot, and it's like dead on. It's more impressive and like mind blowing to me than just pulling the fib retracements.
Right.
I mean, because you just pulled it to the top and then you moved it and it landed from the top of the candle to the bottom of the other candle. It was just, I don't know, it's just perfect.
See, now we've got a body that breaks down below it. We're coming back into it. So what was our original idea here? We haven't had the hourly close yet. I like that idea though. But then you got to know which. It's another way of looking at, am I aiming for the hourly? Am I just trying to take out the last hourly's low just for a quick run on liquidity in terms of my sniping the low? Or do you like those projections, those, you pull your fib tool from the bottom to the top, and then you say, oh, I'm going to go down to 4 standard deviations from or 3 standard deviations, I don't know, whatever your trade setup is. I would still say, what is it I'm aiming for over here that would support 3 standard deviations, 4 standard deviations, or am I just going for the bottom here? That's just another way that people rely on for some validity to a nice little price leg swing. I'm impressed of how you make trading look so simple. Thank you, Huddleston. You're very kind. You're the one making off like a bandit today, though. I like this simple idea right here of this becomes a breaker. As soon as you get below that breaker with a body, I like seeing bodies break that. And as soon as you trade back up into it, and that's the body there, you get short. Stop loss goes right above that high, and then you start scaling up the moment you get below these my little PD arrays on the side here. But that's the same kind of setup you did the other day on Friday, Huddleston. It was beautiful. It was choppy as shit. This would have been nice to see on Friday, but that's the same setup that you had on Friday. You found that you had this little change in direction. We have a break in structure to the downside, breaker, return to the breaker, and get short. And this whole little potential run back up is just a price leg, next price leg down. As long as that breaker doesn't get violated on the upside, you keep your stop loss above it long enough to start breaking some more lows. Then you say, all right, now I can move my stop loss to break even. If that's, I wouldn't have broken it even quite so soon, but you know what I'm saying is you got your breaker. That's the support that you're looking for to get short on. And if you get a double, then that's the unicorn setup, right? So the second time it happens, that's your unicorn setup for a run back down. What chart is that? ES 1 minute and lows are the rejection of 000 opening price 41.52. Your low is 41.35. Yeah, I'm using a MetaTrader, unfortunately, because I have a bot that I run on here every once in a while. So my price is going to be different from yours. If you're using TradingView, it'll be different prices, but look for the same kind of setups on that I'm showing you here. Look for the same kind of setup on your TradingView. You'll have a different price to what I have here. So don't count on the price, just kind of look for the setups, the same setups that I'm having. There's going to be a slight different. And this chart is the US 500, so this is S&P 500. I know you guys are doing futures and you're doing you might have a different kind of chart from mine, but you should have a very similar kind of setup if it's running the same way.
Can you jump over to Euro real quick?
Sure.
See what you see real quick. I'm looking at specifically the 39th, 40th, and 41st minute. That changes structure with that 41st minute. Right?
Right here, yeah. Yeah.
It blasts through.
Yeah.
And then when you switch over to the 5 minute, it just rockets up.
Yeah. So when you're looking at this, look at the range you're in now. So you're at the 50% part of that range. You're also in a breaker. So this last rip up above here. So you got from wick to wick for those two, that 10-minute one. Mm-hmm. You also have this breaker right here. So you got a breaker overlap. You also have an inversion fair value gap that you're coming up to right here on the edge of it. And you're looking at a daily fair value gap. So there's a lot of resistance up or down. You could say overall the bias looks like it's higher. What is our yeah, we're looking to get above this, right?
Yeah, that's what
you're above this now with a body, which is nice. This now becomes the breaker that I was trying to find some support on, and it just ran all the way back down into this mitigation block, hit right off the top of the mitigation block perfectly. Now you're retracing back away. So now we're kind of stuck between this fair value gap daily and order block and on the hourly. So I don't know, I'm kind of stuck in the middle of those two right now. So you're in this fair value gap here on the 5 minute, hasn't finished off. You're in that inversion fair value gap, just coming into it and popping in. You got a daily above you, breaker right here. So I like to see it break above here first, just to kind of get out above that. Or if it comes back into here, look for a stop loss to sit just below this fair value gap here and start reaching for above that. But you know, just know that you got resistance above and resistance below. So not sure. Overall, yeah, looks like a continuation on the upside. But keep your eye on that area there. And this, you want to get this break, you want to see this breaker get squished. You want to see it run right through 3 PD arrays at one time. But you got a chunk of them there. Play off.
I just looked on that 1 minute how it just blasted through, and then when I went to the 5 minute, it was the same thing.
Yeah,
just blasted it through.
Like this is really nice here. We have a break-in structure, fair value gap, return to it. You get in on it here. This is a breakaway gap. Looks nice. It's clean. And you start to go, okay, so what's my PD array I'm aiming for? If you're trying to go really sniping this ring real quick, you want to take little Mr. Fib tool here. There's 50%. That's what we're keying off of right now, banging around in there. So if you got short or got long here, right off of that low, there's 7 pips for you. And that will be 11 pips to the bottom of that daily fair value gap. We have a breaker up here. Those two together. That one's higher than that one, so it's not engulfing it. So don't worry about the wicks. So look for that one. There's another potential scale out point at 70%, 75%. And then up.
Scale out, what's that? I just closed trades. I have yet to scale out.
Oh, okay. So then you just pick your, instead of a scale out, you just pick where you want to say, as soon as it gets above a high, I'm out. Do I want, or is it a pip? See, many people have many different ways they want to trade that. So they might say, I trade based on a fib tool. I trade based on an optimum trade entry or a number of pips. If I get 10 pips, I don't give a shit where it goes. I'm out, right? So whatever.
That's how I do it. I'm like, all right, I'm good 10 to 15 pips in a day.
Yeah.
I don't see the dollar sign, just 10, 15 pips.
Yeah, and I just look for, when can I get in that stress-free trade as soon as I can. So as soon as I break a high, I'll scale a portion out, move to break even, and let the rest run and scale it out above those highs as I go up. And I take 10%, 10%, 10%, and make sure that. But that again, that's just another trading style.
Yeah, I mean, I know I definitely leave tons of money on the table by just closing the trade and not taking any off.
Yeah, but that's why you get a funded account in 2 months, my friend. You've only been doing this for 2 months. All the other guys that are listening right now, Joey and the boys, let me tell you, this guy managed to get a funded account in 2 months, and
just trading silver bullets.
Just trading
London
silver bullets.
New York session.
Yeah, so it can
the
be
AM
done.
Session too. The PM session, I got nervous because it gets too close to the 4 o'clock hour, and
Yeah.
I don't like holding trades, swap fees and stuff. Trying to make money, not give it away.
Mm-hmm. Absolutely. So when I start to see this, then I start to go, okay, so if this is a price leg and we're starting to push down for deeper prices, I want to see this start to give up this. And you start to go, okay, now that's the next price leg down. Look at this order block here, provide some support. Look at the threshold to hold price. There's a little tiny, and you'll see me cut through candles and do this stuff all the time. A lot of you new guys might not like this stuff, but I do. I'm an inversion, fair value, yep, support kind of guy. I love to see these things like this. And I always use yellow if I'm below 1 hour. So see how this is providing a level of support. It comes down, ding, ding, and hits on top of it. And now we want to start to see it moving away. So if I was in here, got short on that, my stop loss, I would move to the bottom of this one because I don't want to see this one give way now. I want to see that one keep providing support and start pushing for this fair value gap on the daily and that breaker above. Always trading PD array to PD array. Many times you can get taken out on trying to reach for the stars, and it turns around and comes back on you and takes you out. So just reaching for, I'm a big fan of pay the trader. Pay the trader, even if it's a little bit. We get so many of these things that happen, so many different trade setups, and it's so cool to watch you guys popping in. This is great, having people to kind of share their ideas, and it is all about sharing your ideas here. So Joey, some really great comments today. I love it. Thank you for that. Lauriston, good for you. You had an awesome trade today. Let's get back to it. So keep your eye on this inversion fair value gap, Kevin. See if
Yeah, I'm just switching back between euro and pound. I took gold off after last week. I took gold off my off my list. I ain't watching that thing.
I don't like
Although
you anymore.
Just literally just brought it up. I'm just curious where it's at.
Yeah, you can take your shiny metal and leave.
Give me the dull one.
Yeah, that's right.
I'll trade silver now.
Gold, we are friends off for sure. Okay, so now we're getting this is 1 minute. We went all the way through that fair value gap. That's what I don't like about that. I would like to have seen that stay open. So now you wait for a new. It really hurts. Sorry, I did not get any comment on the fair value gap on the 5 minute 14.30 on the Nasdaq. Decided to take it and got 40 ticks. Oh, good for you. You went 5 minutes. Sorry, let me about that. I get so many comments coming by there. Did not get any comment on the fair value gap on the 5 minute. 14,366. Oh, this fair value gap up here. 14,366 for me is up in here. Decided to take it and got 40 ticks. Yeah, if you got in on this, man, that's beautiful. Yeah, there's definitely a good long opportunity here. So now we want to see this order block hold price right off the threshold. I like that threshold.
This felt like a really long silver bullet hour. I just realized it's now 11:02.
Yeah. Yeah.
I don't know if that's a good thing or a bad thing.
Good opportunity on NASDAQ to go long. Yeah, there we have a break in structure here now. So this is the potential long rate here. We just wait for a return. Now if you got right in there off that high, good for you, Huddleston. If you nailed that high, man, that's awesome. I just saw it now. So this opened, came back, tagged the high. And if it runs from here, good for you, man. You caught a nice one. It's also that little tiny inversion fair value gap right here. Look at this one right here. Bang. So if it tags it one more time, that's a long. If not, if you're on that long, Huddleston, good for you, man.
Huddleston, how close are you running your stops?
I say he says it was really close.
Yeah, that's why I'm curious. I'm curious how tight his stops are.
Yeah, usually your stop is down here, about below that, right? So he must have been snugging her tight. One point.
Wow.
You're the kind of guy who goes up and bitch slaps a bear and stares him down. My honey, get out of here.
How many contracts?
Oh, it was 1 point away from his stop loss. It wasn't a 1 point stop loss.
Yeah.
It was just 1 point away. He got bluff charged, pooped himself, but stood his ground. Good man.
That's what I think. I make my stops too wide, and I, instead of taking some off on the way up, I just, all right, I'm at 12 pips, close the whole trade.
Yeah.
Instead of moving it to like 10, moving my stop loss to 10 or something, and then letting it just run.
32 contracts you had on that? Oh, it's demo.
Oh, demo.
He likes to see some big numbers coming into his demo account. Holy cow, 32 contracts.
I have to say, Top Step only allows you 13, and once you get funded, you have to do it in steps.
Oh yeah.
Yeah. For the first $1,500, you can only use 3 contracts. Over $1,500, but less than $2,500, I think, is 4 contracts. 25 to 4,000, I think, is 6, and then over 4,500, you can do the full account of 15 contracts.
Oh, I see.
They step it, whereas my funded futures doesn't have a step program.
Right.
But it does cost a little more.
Do they also limit how much you can, how close to the news events you can trade?
Neither one of them have news restrictions.
Oh yeah, Fivers has a
Top Step has a withdrawal limit. You can only take a certain amount out until you hit a certain amount of money.
Oh,
anything. So basically, you have to hit like 14,500, I believe, and then that first 10 grand is yours, and then you always have to stay at higher than 4,500 profit.
Got it.
If not, your count gets violated or whatever. So it's kind kind of weird because you need to have basically, I would say like 18 grand before you really want to withdraw that 10 grand.
Right.
Because you still have that 4,500 buffer that you have to have in there.
Got it. Yeah. Yeah, Fivers has a news that won't let you take any trades within 3 minutes on either side. 3 minutes of a news event.
I mean, that's good. That protects. That's
It protects them.
Protects the,
I totally get
protects
that.
them as well as teaches the gamblers, so to say, not to go all in. Right before news to hopefully you hit it or to clear the account.
They want people that are actually committed to trading, right?
Not, exactly, yeah.
Not just gamblers that are just trying to load up everything and just go for the big haul right off the bat.
Yep.
I know FX Pig ran a contest this year, and they had no limits on their contracts. So people would you start off with a $10,000 account, and people were putting 50 contracts on there going for gold, and they're either way up by 3,000%, and then they just move to the sidelines and wait to the end of the month because they just won the contest with one trade. So then they have to slowly start adding all these rules to the contest, and it just started getting ridiculous because people would just powerball the first trade in there and say, if I win this one, it was a 50-50 gamble. If they win it, then they could have won $1,000 for the month, right? So you get all the gamblers come out. It's like, okay, you're not really creating a trading contest now. This is just gamblers who's got the best ability to gamble on a trade, right?
And that's what I don't understand about like Bespoke. They had like a competition, like a monthly competition, and like see all the comments. So people are like, "Oh, why is it not updated? Why is it?" People are trading more contracts than they're allowed, or more. It's like, why are you wasting your time on a competition?
Exactly.
Like, okay, granted, you could win, but at the same time, like, you're wasting so much energy in that. Where I took the slow approach and just, I did my little thing. Only did those certain silver bullets, and that was it. And this euro is pushing.
Okay.
Cleared out.
There's another entry right there.
I'm on the 15-minute. Where were you at here?
That's 1 minute. There's one right there off of that bottom. There's a fair value gap there that formed. Enter in right there.
Just a little pipette.
Mm-hmm. It's all you need sometimes.
Looks like we're gonna hit a new daily high. New top wick. The big numbers help with losses on my small accounts.
Right. So you should still be in this then, Lauriston, with your... I'm just waiting for it to come back into this inversion fair value gap one more time, or this old high. Anything inside that fair value gap I can get in on a long, or down in here. I want this to stay open, so this would be a nice one to tag off of if we get it.
What?
(9/11). I don't know why
You always notice it.
I don't know why. It's the paramedic in me, I guess. It's like, oh, 911. It's funny because when we got our phone numbers back in the day, you could walk into a phone store. If you ordered a cell phone, you get to pick your own phone number. So all the fire guys were like, oh, I want 0911. I want 911. Anything we'd all jump in on the 911. I think most of the guys at the hall ended up getting 911 numbers.
That's why I got my cell phone in '99, and my father got one. So our phone numbers are one number apart.
Oh yeah.
Yeah, because like you said, back then they give you a list. Like, okay, here's what numbers do you want?
Yeah.
And you got the pick.
So this was a fill of the fair value gap. Look at that with absolute precision. Boom. Right there to there. Right on the money. So now we're pulling back into... Oh, I didn't take it. I'll wait. I'll wait. I like the... 50%.
Now, how come sometimes you enter a trade at 50% and other times you wait?
Mm-hmm. I think because
Why is that?
I look
because
for...
I've noticed that sometimes.
Yeah, sometimes I'll look for like if there's a breaker or something on the other side, like equal highs, then I go, well, that lines up with equal highs here.
Okay.
We may only get that equal high hit and then leave.
Yeah.
Like we're inside these equal highs right now. So we may just leave from here. And if you go, well, there's 62%, brings us back in here. That's a nice little, that's 50% of that range right there, 70%. I put this line over here because I liked one of the higher time frame retracements.
Now, say you just entered there at the 50.
Yeah.
Where would you put your stop?
My stop loss would go down here.
Okay, now second question. Would you then enter in again at the OTE? At the 73%?
Yeah, it's like the bot.
Down?
It's like the bot, right? The bot would enter in at that low, that open, then the threshold, then the low. That's what the bot would enter into. So ideally, that's why I designed it, is so that it enters in wildcard, which is as soon as that is recognized, it will take the end. As soon as that opens up, it takes a trade. It waits for it. It puts 3 trades in here, 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 and here, as those are the areas that I've identified as key levels to run. Now, if this was just going to take off, I would get...
Oh, okay. I do remember seeing that happen.
Yeah, I would definitely get one in there. And if they just, every time it runs up, if you never come back to those fair value gaps, I'm still in. The wild card entry takes you in still.
Mm-hmm.
So I'm going to put one right there, right off that guy there. And the stop loss will go right down in below here. I don't want to see that fill now. There's 50% of it there. And you want to see this stay open now as a form of a breakaway gap.
Joey said he shorted at 110 or 1110.
1110. Oh, this one here. You shorted that high.
So he caught this run down.
Oh, Joey shorted the high. One contract, yes. 5 handles. I'm out. It was 1-to-1 ratio. Good for you, Joey.
Nice.
Good work, buddy. Yeah, you took right at that close of the fair value gap. Good for you. So that came back to that higher time frame one I was looking for. We drew that line earlier. Really good traders in here. Yeah, good for you, Joey. It's nice to have a bunch of people in that that can share their ideas. That's the whole part of the community is just to kind of build something where people can come in and nobody's wrong, man. Everybody's got an opinion. Everybody's entitled to an opinion. It's not about being right or wrong. It's about, share your knowledge. You're allowed a voice here. All the same, though. And avoid. Yep. I don't see a 1 minute fair value if I have 1 minute. I'm on. That must be the E-mini S&P futures contract you're looking at, Joey. How can you enter the club? You're in the club, buddy. You're in the club. Oh, you want to get on Skype? Is that what you're talking about? You want to get on the chatty chat? Is that what you want to do?
Breakfast Club.
He wants to be in the club. He wants to be chatting away.
No Derek today. Where's Derek?
I know, there's no Derek. A little disappointed.
Did he tell you he wasn't going to be here? At least I tell you I'm not going to be here when
I wasn't sure.
It's a requirement.
I appreciate it.
You're not going to show up. You need to make it known.
Yeah, I need to know if my buddies are around. Yeah, I can drop the link in here if you want to pop into the Skype, Joey. Hang on. I'm just going to try and figure out how the hell to do it here. Copy invite link. There we go. Do you have Skype, Joey?
You should add your Twitter to your YouTube bio as well, so people follow you on there.
The Twitter bio. Oh yeah. Let's see if I can find it now. Twitter. Notifications. How do you create? Oh, wait a second, right here. Is this it? Copy link. Let's try this one. Paste. Oh, it's a log out. Forget it. Ignore that one. Yeah, you're welcome, Joey. Pop in, buddy. Anybody else who's in, if you see the Skype thing there, you can pop in and share your ideas. All I ask is you respect other people's opinions, and I don't want to hear anybody trolling anybody in here. Not that you're going to do that, but I'll have to kind of put that out there. Twitter. That's not the one I was looking for.
I think I got out of my Euro trade a little too soon. Keeps pushing higher.
Oh, you were in it?
Yeah.
Oh wow, yeah, that was a nice one.
Like I said, I and I always say it. I get out of the trades and I just cut it. I'm like, all right, I'm good.
Did you just get above here?
Yeah.
Yeah, okay. Nothing wrong with that. Nothing wrong with that at all. Came back, did exactly what we're calling for today. CAD came back, hit the inversion fair value gap. Now we're on the run, so that's good. Oh, this means this one should be starting to reverse now. No. Came back, keyed off of there. Pretty close to keying off of that one. Gold's not.
You guys hear me?
Ah, yes. There he is. There's Joey.
Hey, what's up? Hey, so do you watch any other pairs like side by side, like the ES and Nasdaq together, and with equilibrium?
Like the S&P or SMT divergence and convergence, that kind of stuff.
Yeah, like always looking for divergences in Nasdaq or SPY.
Yeah, we look for that sometimes just to confirm a direction. Like if we're looking for strength or weakness in one or the other, I just jump back and forth like this and look for. Sorry, let me move this guy over here. I go back and forth between these two like this and see where.
Okay.
That's usually how I'll jump back and forth, just kind of
I'm a OTE trader, so I like taking positions after 11 during maybe 11:30 after that 10 o'clock run has gone through.
Right.
So I'll draw the OT from top to bottom using bodies, not wicks, on the 1 minute. And right there when I got short at 11:10, I saw that the Nasdaq was rejecting right at 50% of the morning range, like to the tick, and ES just ran a little above the 50%, but it didn't even look like it wanted the 62%, so that's why I went short on the higher high. But also Dixie was entering a long-term discount. I'd set an alarm on that. Not long-term, it's like just last week's, from 24 October, just the whole week range,
right.
50% of the range we hit. And looking at it now, we didn't even bounce off the 50%. We're still going down on Dixie, but I still was able to hit 5 handles off that because there was like a little 1 hour volume imbalance in the dollar right under discount, and we did bounce from that. That's where the 5 handles came from.
Right.
But I can't trade non-symmetrical markets like this. Like, I need to see Dixie go down and ES, Nasdaq go up, and today it's just been choppy.
Yeah.
So I took the trade on demo, not on the challenge account, because we're non-symmetrical right now.
Right.
Do you also measure anytime we are consolidating, would you measure that consolidation range just to see the 50% of the consolidation so we can see how price respects
Oh yeah,
which half we're in?
Yeah, I love doing that in terms of if you look for a 50%, usually if we've broken out above a consolidation and we return back into a consolidated range, usually you'll clip the top of them or back to 50% of that range, and then if we're bullish still, we'll come from this. It's a stronger bullish if we come from the top. We hit 50% of it. You can usually dip back in there and still be bullish, but once you break through that 50% of that consolidation, then you're more bearish. That doesn't really support price for going higher.
Yeah, when you guys were making bullish theses during, like, I don't know, within the last 30 minutes, when you guys, because we did have a change of state of direction going bullishness, but this is all bearishness. Like, this is just manipulation or leg up. Now that I'm looking at the dollar and we're still going down, and we're still going down on Nasdaq, yes, then I do think lower prices still today, because I think the dollar's just, I don't know.
Yeah, we're looking for this
Dollar strong.
a fill of this imbalance back at the beginning of the new week opening gap, right?
Yes.
That hasn't
Yep.
been filled yet, so we're looking for a push down into here, at least the top of this weekly fair value gap too.
Yes. Also, you don't draw 8:30 open or midnight open?
No.
Gotcha.
I've got that on this crazy ass indicator I bought. It does all that stuff. Like if you look at this one, object, indicator list, properties, like this guy has literally everything you want to line up, show. You want to show times, midnight opens, you can have them all in here. They're all part of it. Asian opens, he's got literally everything. And then you can set alarms that will let you know by phone. It will let you know by email. It's absolutely insane the amount of stuff this guy's got, because he's just tried to take a lot of ICT stuff and throw it all onto a chart. And you got to know what the hell you're looking for to make it work, for sure. But those are definitely like I will usually mark out the new week opening gaps, just because I like to see those as areas of sensitivity. I'll mark the threshold, and then I'll just extend them for the 5, 6 weeks or 8 weeks that he recommends, and then I'll slowly start cutting them out.
I got you. So do you trade one model or multiple models?
Multiple models, yeah.
Okay.
I'm the exact opposite. Silver bullet only. Right now it's 11.29. I don't touch anything.
Yeah.
So 10
and 11 for me. That's it.
and 2 to 3.
Yeah. Yeah, I do the London because I'm at work then. So I'm
Or the PM session.
Nope.
Silver bullet. No.
No, I don't do the PM. I'm usually asleep. I work midnight shift, so I'm usually asleep by then.
And you guys are in West Coast, right?
I'm East Coast. I'm in New Jersey.
Oh, okay.
I'm in Canada.
Wait,
yeah, so I'm way up north.
I'm talking about the silver bullet between 2 p.m. and 3 p.m. You're sleeping at 2 p.m.?
Yeah. Yeah.
Oh,
I work
because you do
11
night
PM.
shifts?
Yeah, 11 p.m. to 7 a.m. I'm at work, so I do the London at work, and then I get home. I jump on here, do the New York, and then head to bed.
I got you.
And I try to be out of every trade before I leave work. Obviously, I try to be out before 4 o'clock because I only go for like 10 to 15 pips max, and I usually don't scale out. I just close the trade as soon as it hits my amount. And then same thing with the New York session. I just try to get in, get the pips, and then I cut it.
Yeah. Would you guys say you guys are a different type of trader when you're in drawdown versus the opposite if you're not in drawdown? Like you've had a good profitable week, would you say the trades are different, or is everything the same?
I think when you've had a really good week, I think the psychology, sometimes you go through the well, I've had a really good week, and you can say, well, I can be more risky with some of my profits instead of my overall principal. And I start to look, I'm always kind of looking for multiple different testing opportunities to test out old or new trading models. Like I like to try and be as versatile as I can. And yeah, so if I've had a real profitable week, I will start to cut this number down quite significantly. Like I'll chop it in half. And when you get to Friday, like I'm trading $1 a pip or $1 a handle.
I got you.
Just because you don't want to lose whatever you've already accumulated during the week. Like some people, I don't have a limit that I set for the week. Like if I make this much, then I'm out. If I still see an opportunity to get in for, I'll just keep cutting my leverage down once you're starting to make some money, you cut your leverage down. You should be cutting it down if you're taking losses as well. Usually if it's 1 or 2 losses in the day, then I'm out and I won't bother running for the rest of the day. I'll go somewhere. I'll wait for the next day for something to set up.
Yeah, I'm still trying to figure out, my own rules, because I've been the trader where I'll sit there and do 2 trades, lose, and leave the day, and then come back maybe in the PM session, do 1 trade. If I lose that trade, I'll be done for sure for 3 losses for the whole day. But then there's another part of me that, like, if I try hard and I actually work hard, I can usually get back the drawdown at the end of the day.
Right.
Most time than not. Instead of just, oh, you know what, 3 trades I've lost, I'm done. Like, there's usually like a good play at the last hour of the day that I usually see. But yeah, those rules I'm still trying to work on to see what's better for me.
Mm-hmm.
See, now, because I traded the AM or the London session, I would risk whatever I made there in my New York session.
Mm.
And if I lost, okay, it was a 0 day for me. So I really didn't go too much into drawdown because I did the London session. If I did the London session and it was a negative day, I wouldn't even trade the AM. I would just count it as a next day. Today's not my market. I've seen something wrong, and I wouldn't even look at the chart the rest of the day.
Okay.
That was for me, and it took me about a month to get funded on a 100K account, and then I blew it last week because I didn't see the gold. Presented the wrong amount. So right before I was
using Top Step.
No, I was using Bespoke.
Oh, Bespoke.
But I know about Top Step and the other ones.
Yeah.
And
they just gave a free reset out last week. That was pretty nice.
If you watch their show each day, some days they do a whole reset, like I think they call it a red alert or a red alarm or something like that. Within a 10-minute span, if you're there, they send out the code, or they say the code in their little TV show, and then you go into your account and you reset it, and it's free.
Wow. So yeah, I was having problems with my ThetaWave last week. I believe it was Thursday. They logged us out like midday, and then they're like, you know what, Friday you have the whole day to reset, free reset if you want. And I was like, all right, I'm gonna go in there really aggressive, and I shorted the 930. Nasdaq was the only one running the highs out of Dow and ES, and I was like, all right, easy money. It went straight back down. I was like $500 up, and then literally blew the account by lunch. And then I was like, all right, free reset. Took 1 trade, got a win, and I was like, all right, I'm done. I'll start my Monday with this little win, and that's it. But I've been working on a $100,000 account now for the last 3 months. Haven't blown it. I haven't passed it. And that blowing was just like, I only blew it because I knew I had a free reset that I had to use that day. I didn't have to use it,
right.
But I was pretty much gambling. That's what I was doing because I had the free reset.
Right.
But yeah, I'm super. I mean, that tells you what type of trader I am. If I can't blow $2,000 in 3 months, I'm very conservative. But I'm also a break-even trader too. I feel like
that's how I got funded though. I literally nibbled off day to day. It took me a little over a month to get funded for the 100K, and that's only making 8K. So,
oh, you needed to make 8K to pass?
Yeah, well, 8 and then 5.
Oh wow!
And then I got funded, but I literally just a little bit of trades, little $300 here,
yeah,
125 here, like that was it.
Using micros or minis?
Well, I'm doing Euro.
Oh, okay.
Yeah.
So he's talking about lot size. So what was your lot size?
Oh, I was doing like 3.
3 lots. So you do a full lot then.
Yeah, I wouldn't because I didn't want to blow the account.
Yeah,
so
I've never.
Like just take it super slow.
Yeah.
And I found Darren what is it, Darren? Maybe 5-6 weeks ago.
Yeah.
Yeah, and I tune in every day, and I'm here and asking questions. As I said earlier, can you look at Euro real quick? Like what I was seeing, it would match up with what he was seeing.
So ever since you found Darren, you've seen some good results.
I think he's helped refine everything I was seeing,
Yeah.
and really backed it up, because I haven't really been in this very long, especially the silver bullet. I just came on to it like 2 months before him, but I signed up for FX Replay, and I back tested all of 2016 and 2017 for just a silver bullet for the London and the New York session, and I found success with that. And I was like, you know what, let me try an valuation account. I did it, and then there's some trades that I questioned Darren on, and he's like, nope, not good. I'm like, okay, and just paper traded it, and sure enough, it would have been bad for me.
Yeah.
So, and then there's other trades that he's like, all right, this is good, and he goes in on it, and it's not something I trade, so I don't go in on it.
Yeah.
And it still works out, profitable for him, and I'm just on the sidelines because I don't trade it. I'm just not going to go in on it, just because and he gives excellent advice. I'm not sure if you found him the previous day other than today, but I've been with him now 5 or 6 weeks, I think it is.
Yeah,
and it's great. So
nice. Yeah, I
tons
just
of
found
knowledge.
it today.
Yeah.
Nice. Yeah. I think there's definitely something to learn here.
Yeah, it's
I like the
definitely.
fact that we got lots of guys in now that are their ICT stuff, man. They've seen it, and they're working it, and I love hearing all these different points of view and listening to some of the stuff you've got, Joey. Just the way you're describing what you're looking at the SMT divergence. I'm like, man, I was never really good at SMT divergence. And the fact that you find your entries off of those, that's great. It's all learning, man. I just love sharing. And I tell you, I am not Michael by any stretch, but I see some stuff. I try to look at PDRA to PDRA. I try to look at order blocks and talk it as it's happening. Say, okay, this should hold price. This should go here now. And I can talk it while it's happening. And then my objectives for higher time frame stuff, I'm still working on that as well.
I got you. I need to. Now that I've learned these concepts and I've been using them for a couple months, whatever, I want to start using it on stocks because it works. Even the projections work on like a Marlboro, like some tobacco company. You can go do some crazy standard deviation projections there, and they're all like to the cent. And you're like, this is a Marlboro. Why does the algorithm exist here? But one side of me, it's the algorithm, like quote unquote, but it really is just institutional traders where they're trading, or they're putting their money.
Yeah, I'm totally into that whole algo thing, man. I just love it. Works on stocks, commodities, everything. Yeah.
So I just watched the precision trading playlist, and Michael was just talking about the 9 and 18 on the weekly, and it's that simple. You just put the 9 and 18 EMA on a weekly chart, and that trend is going to be there for a while. It's their long-term trends, and so I wanted to use that for stocks, but just because it crosses the 9 and 18 doesn't mean anything. If there's a breaker there or a bearish order block that I can use or something on an order block, then yeah. So I need to start building a portfolio for that. But real quick, can you, on your S&P chart, can you look at the order block, the hourly chart for 0400? It should be a bullish order block at 04. Sorry, London. 0400.
This one?
AM. No, 0400 AM, which would be like New York.
For you guys, for New York. Okay, so you're looking at
New York is 04. So your time would be.
So my time, server 4 o'clock would be 7:11. I think it'd be around here 11.
Oh, I'm sorry. It should be the order block for 0400 Friday, 27 October.
That one there.
Friday, 27 October.
Yeah, this is Friday.
That's 30 October.
No, this is Thursday. This is 27 right here. This is.
It says 10:30 at 12.
See right, see where it says 1027.12?
Yeah.
Right there. That's 1027. That's the bullish order block at 4 in the morning.
Okay, yes. So on my chart, the closing of that order block is the exact high of today's ES.
Oh, okay. Yeah, no, my one just popped above it today into the daily fair value gap, just popped above it. That was the bottom of the daily fair value gap I have on mine back on the 27th. And today's high, it says high is 41.69.29, and that candle is 41.67.84.
So it respected.
So it went just 69.21 and 67.84. So it went two handles above that high, or that candle, not that high. The high is here is 48.29 or 68.29, and this is 69.29. So that went one handle above that high that I have on the 12th. So your 5 a.m. was my high, and your 4 a.m. is your high.
I got you.
So there was just a slight, we just ran that high out. And I think that's what Lauriston got into today. He ran that, he took the high as it was cleaning it out, and then started running back down. So yeah, what did you want to know about that one? So that one's the breaker, right?
No, that was I just wanted to see if your order block on that chart was like respecting the movement downwards. So if you can you just highlight that whole order block with like a drawing, and then just extend it, and then let's just look at a 1 minute chart from that order block.
That's 1 minute there. Let me just make this little. Let me get rid of the one down here so it doesn't confuse us.
So you see how we ran that high after we rejected from the order block?
So that's the high here, right? So we ran that high, came back down.
Yeah.
Here's your breaker. Last down close counted for run above these highs. So you break through the breaker right here. And as soon as you trade, I like a body to break through it. Some people just prefer a wick is fine. I like a body to break through. So this body breaks through this breaker right here. Then when it trades back into the breaker, that's your short. It also trades back into a little price imbalance sitting right here. And then you get short. So your stop loss would go above your breaker's high, or above here if you wanted. And then you just let her rip if that's where you're anticipating breaking an old high. So that was Friday's high in London. Clean that out. So then you wait for a break in market structure to the downside. This is your break in structure. It's your breaker, break in structure, return into your breaker. You get short there, and then your second return into your order block right here is your unicorn. Did you learn about? Have you done the whole mentorship?
Yeah, I have 2022, and then all the little precision OTEs, all the little other playlists. I'm just working on core content now.
Okay, yeah, that unicorn setup is not part of the core content, but it's something he brought in after the fact. But that's a beautiful little opportunity to run for these lows.
Yeah, the unicorn is the second stage distribution, right?
Right. Yeah.
Is it Danny? Oh, it's Kevin. Kevin, did you take that silver bullet trade right there off that hourly order block?
For the S&P, no. S&P is not something I normally trade.
Oh, that's right. You do Forex.
Yeah.
So I'm watching this, and I'm right under it. I'm watching the Nasdaq on 1 minute, side by side. and I see this. I see, okay, we just hit this hourly order block. NASDAQ just ran the last 2 days of highs. ES still hasn't ran Friday's high.
Oh,
And
yeah.
then I see this where S&P runs as high one more time. NASDAQ did not. And that's like a red flag, because usually NASDAQ's the one that's doing the fake outs, the raids, because it's so volatile. But that was just showing signs of weakness. Yeah. And it ran,
Yeah.
2 days highs.
Ran both of those highs out. These guys didn't.
Friday and Thursday.
This one just ran out that by just stop run. And these guys did a full-on 2 days back, hey? And into that imbalance there. These guys,
wait a minute.
They didn't even reach for that.
On your chart, did it take out Friday's high?
It did take out Friday's high, yeah.
Oh, wow. On ES1, the actual continuous contract, it did not by 1 point. It was 1 point off.
And it's funny, yeah, and that was 1 point over.
Wow.
That's literally 1 point over right there.
Another thing I would like to share with you guys that I found is when I'm watching ES or the micro contract, MES, or the continuous contract, if I was watching SPY, the stock price SPY versus the future contract, if the SPY runs a previous day high or low, you will see like that will be the change of direction in the day. It doesn't have to be the future contract running the previous day high or low. It could just be the SPY.
Oh, really?
Yeah, I mean, it's insane how it all correlates, but I don't know how people can just do it like looking at one chart, because there's so much information available if you just look at SPY, ES, the continuous contract, the micro contract. They're all different, like they all have small differences. They're not symmetrical, and I think it's insight.
Mm-hmm.
Same with QQQ and NASDAQ. If QQQ is running a higher low previous day, then you'll see NASDAQ react to that.
Interesting. That's interesting. See, now you can share on here. You can share your
screen
at stuff, because you're on Skype now, so you can share that if you're ever interested in looking at showing charts and stuff like that. And then if you want, I can quite easily drag that over to the live screen too, so everybody else can see it, if that's something you're interested in doing.
It's up to you. I don't mind. I have 3 monitors. One that has Dixie, NASDAQ, ES, and Dow. I'm looking at the midnight open, and just the highs and lows of every day. That's all that chart has. And then the one I'm sharing with you right now through Skype is like my ThetaWave chart. That's where I'll be doing the actual executions on the micro charts, not the minis. And then I'm also on another monitor just looking at the actual continuous contracts. Because I used to do all my charting on the micro contracts, like the ones we're trading in right now with the highest open interest, but then I realized that we mostly follow the continuous contract PDRAs at the minis, which makes sense because the bigger banks, they're not trading micros, they're trading minis.
Right.
Can you see my screen?
Nope, I can't.
No.
Yeah, did you put...
Let me see. Should it be a window or... Yeah, it's a window. Window. Start sharing. Then I put start sharing and it doesn't even show anything.
It's just blank screen on my end. Let me just see if I...
Yeah.
I gotta make sure.
Yeah.
Let me try sharing a desktop. No.
Yeah, it just shows a blank screen.
It's all good. I'll let it sit there. Maybe it has to load or something.
Okay.
Do you guys trade any stocks like long-term options using these concepts?
I have traded options. The long-term stuff I'm in is gas.
Oh, nice. CL?
I'm in.
No, it's oil.
This is natural gas. So this was the fair value gap weekly, broke up above it. Next fair value gap weekly is here. We return to the top, finding this is an inversion fair value gap. This is what we're calling for a return, and it's booked it up out of there. Now we're looking for this fair value gap to hold price as an inversion and then start running up for higher prices. So I've got quite a lot of like personal money in this stock in UNG. Like if you look at UNG on the charts, you'll see I'm using the principles for that. I bought back in May on a fair value gap, and yeah, so that I'm holding that one long term. That's going to be 1 to 2 years. I'm looking for these old equal highs up here, these big pockets of liquidity sitting back up in here, where price is going to slowly march its way back up. That's my overall long-term one, and I'm in a lot of ETFs as well. In Canada, we have ETFs, and ETFs play the same way. They're all driven by the same algo.
Gotcha. So you're in Canada?
Yeah.
Nice. I've been to Nova Scotia once.
Oh, you have? Yeah, it's nice out there. You got to come out to the mountains.
Yeah.
Mountains is where it's at, man.
Oh yeah, I bet. I just went hiking a little bit and did some smallmouth fishing.
Nice. Yeah, you got to come.
Where are you located at?
I'm in Virginia.
Oh, okay. To the north of you. I'm in New Jersey.
I got you. I was in DC yesterday.
Nice.
I went over there to look at the fall foliage. It was nice. The fall foliage is over in Canada, right? It's just winter now, or what?
Oh yeah, we're knee deep in snow already here. It's like brutal, man. I hate the snow here. And it was great because like a couple of weeks ago it was like 17 degrees. It was really nice and hot. Well, hot-ish. And then literally within days it just went bang, and then we just got dumped. The snow came and it was like winter has arrived. And now we're getting some days where it's kind of thawing out, kind of teasing us a little bit, getting a bit of slush, and then it turns to ice on the roads.
Kevin, have you ever tried sharing your screen on here?
I have not.
Can you just try real quick to see if it works, please? Just share anything, and then you can just turn it off right away if it works. Oh, it worked.
Yep.
Well, it did?
Yep.
I see something popping up. It's just a gray screen, though.
Yeah, I see Kevin's screen pop up.
Yeah, it popped up, but it's still blank.
Oh, really? It's blank on your end.
Yeah.
Yeah, I see Kevin's screen just popped up here.
Huh.
Oh yeah, there's stuff sharing at the top. Let's reload.
Yeah, I see yours. You're on British pound. Euro.
Yep.
Yeah, I got you.
Kevin, do you chart Dixie?
I do not. It's a little more.
Man.
I know I should, but
Oh yeah.
you know,
It will level up your trading. I mean, if you're a big forex guy, definitely.
yeah.
I mean, any trader needs to be looking at the Dixie.
Mm-hmm.
Gotta look at the Dixie. Yeah, just knowing where that long-term, well, just last week's range 50% at versus where we are right now, you would see there. It's correlating. Even the new week opening gaps on Dixie are just like super spot on. Like Dixie loves new week opening gaps. It's so clean. I might just start trading Dixie, to be honest. It's like the inversion fair value gaps for the 1 hour and 4 hour. It's always almost perfect.
Wow.
So yeah, man, just try doing Dixie analysis. You'll see.
I'll check it out tonight when I'm at work, I guess. Give me something new to look up.
Yeah, for Dixie, for Forex, how does it correlate? It's dollar up and
Euro down. Yeah.
Euro down.
All right, well, I got a couple more minutes, and then I'm out of here for the day. This is kind of a slop and chop. Looks like we might have another... I'm looking at this order block midpoint here now, just seeing if this provides a level of support here. If not here, look for... look for the breaker. Is that what we tapped there? Yeah, that was Friday's breaker.
I can't see your screen anymore.
Oh wait, let me share it here.
There it is.
So that's the hourly. That's what it's banging off of right now. So if you lose that, look for the midpoint of this breaker here, rejection block, and then the old highs again. Liquidity sitting up over here. But that looks like a level of a potential support here. If we are going to continue down, look at that, it's just banging off of it perfectly here. So if this holds here and starts to trace back down, look for this gap to fill on the downside. If not, we could be taking one more run above this old high here.
I shared an idea on the Skype. It let me put a picture in there, but I just measured the last leg of manipulation in the NASDAQ at the 10:45 a.m. And the -4 standard deviation lines up perfectly with a 30-second inversion fair value gap.
Oh yeah, I see that.
That's a target, and it's also the bottom of, like it's a mitigation block at the bottom of that range before we expand it downward. When things line up like that perfectly, I circle it.
Yeah, for sure. I totally agree. And that's on, what do you got that on the 30-second chart?
Yeah.
Woo.
Yeah.
Too quick for me.
Yeah, it's a little fast for me. I think my charts don't even go down there. It just stays at 1 minute.
Oh yeah. I mean, go look at the 1 second chart. It's way too.
Oh man, that's like sexy quick. Wow.
So now, do you go for the bottom of the fair value gap, or do you go 50%? Do you go to the full range?
What fair value gap? The 30-second inversion fair value gap?
Yeah, the one that you have marked off there.
Oh, the target would be, so like the -4 is not saying, hey, I'm gonna go short here. That would be, if I was long right now, that would be a target. So it'd be the top of the the top of the 30-second inversion, exactly where -4 standard deviation is. That would be the target.
That's where he's looking at right here. You're looking for that one right there, right across the top. Right at the -4. That's the 30-second chart on the NASDAQ.
Yeah.
You're looking for right in there. Okay.
Yeah. Yeah, that's an inversion for value gap right there.
Yep.
And then, yeah, so I mean, if I were to take a profit, probably if I was long here, I'll do maybe one handle below that -4 at the bottom. Yeah, right there at the bottom of those wicks, because
Right.
you know the top is not for sure since those wicks are hanging down a little bit.
Yep. Yep. Totally agree. Totally agree.
After that, I don't know.
30-second chart. Whew.
Man, if you saw like the concepts, you know, that we've learned in the 30-second, it's there. Like,
Oh yeah, they're all. You get down to the 1 second. The algo runs all the way down there. Everything's fractal, right?
right.
I just can't get down to the one. I can't get below 1 minute on mine.
I'm trying to be a 5-minute trader. Like, I don't want to look at the 30-second. I don't want to look at the 15-second. I'd like the lowest I want to go is 5 minutes, but I don't know. I think most of my models or my plays are. I see them folding out on the 30-second chart.
Oh yeah.
Yeah.
All right. Well, that's going to be it for me. So just kind of keep your eye on this breaker here, fair value gap high, or the low of the daily fair value gap. See if we're going to run these highs out one more time. I want to see this kind of hold price. Look, there's also, we may get a run up just to the rejection block, roll over and come back down again. But I want to see if this holds price. Wait for the bodies to respect that threshold. If it doesn't, look for the rejection block in the old highs. If not, if it does hold, look for a return back down into lunch hour, taking these lows out. But that will be it for me for the day. And tomorrow I will be back bright and early, 7:20 Canadian time. That's 9:20 American time, New York time.
Nice.
So if you guys are around, pop on in. And thanks again for popping in. Thanks for your input today, Joey. I love it, man. I really respect it. Thank you very much for your input. And if you're in again tomorrow, you know where to find us.
Awesome. Yeah, I'll be here.
All right.
Have a good one, guys.
Thanks, guys.
Have a good one.
Take care.
Bye-bye.
And that's it for me for today. So thanks for all of you who are tuning in a little bit later. Remember, it's a tough world out there. Love each other. Spread the love if you got it. Be kind. Rewind, as we used to say back in Blockbuster days. Take care, guys, and we'll see you again tomorrow.